Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, very disappointing day today. The stock market is off and the Nasdaq is down. Also, there was a Russian strike on the nuclear plant in the Ukraine, so that definitely is putting some pressure on the oil markets. Oil hit a high today. I just kind of want to show you that. Basically, it's the highest since 2014. We are up about at 110 a barrel here for oil. So, in a word, ouch. If you've been following me for a while, you know that I have been moving into the kind of the oil patch stocks. I do have some stuff there. I'll show you that in a second. I got stopped out of half of my position in Google. Google pulled back. I decided, well, it's time to, do what you need to do, and and not be in Google. So that was going to show up as well. If you're watching on TikTok and you want to see all these charts, super easy to do. Just go to my profile up here, and then you will see a live feed for the slides. If you just press a link, it says beacons, and then it'll go right to the slide show. All right, here we go. Here is the stock market overview. We're down basically on the Dow, we're down on the S&P, and we're down on the Nasdaq, as well as the Russell. So we're 4 for 4. We're down on everything, and it does look like we had the Nasdaq rally up to the 21-day line, but it did not hold it. It is moving lower. So I think we got a brace for heavy weather. Here's the thing. I just want to put it out there for everyone. If you're in if you're in any stock and you're down more than 7%, consider selling it and then waiting for a better entry point. And then we'll get we'll be talking about that, of course, more. But never let a stock move against you more than about 7% from your buy price. It just isn't worth it in the long run. So be very, very careful. If you're down more than 7% on any stock, I would recommend selling right now and maybe waiting for a better condition. Just one of those things, it's just how it kind of works. We're in a downward trend. I want to show you some trades, though, that are doing good. These are my spread trades. And these have been doing very well. And this one is a bear trade on Lulu. You're probably familiar with Lululemon. This stock has been a winner up until now, but it is now retreating. So we did put a spread. We did put a bear spread on it. So if you can look at looking at the chart here, you can see that it's been in this downward trend. It's been in this downward trend, and then we did pass through the death cross. That's where the 50-day moves below the 200-day. We did put we did put a short on it right about here a few days ago, and as you can see, this is essentially how it's coming. We're up about $63 on that short from Tuesday when we put the short on, and we'll be updating you on that on the other shares. Also, we do have a bull trade, and this trade benefits if a stock is going up. This is on Rio Tinto, and this has been one of the few areas in the market that is doing well, oils and minerals. We decided not to buy the shares on this one, but rather to do a spread trade. This one's up about $255 since we started back, basically at the beginning of early in February. We went into this one. So take a look at this one on the chart for Rio. This is the live chart for Rio, and as you can see, it did pull back a little bit today, but the trend has been up, and I do believe that it will be up further from here. As you can see on February 11th, we did enter the trade. We did enter this bull trade on Rio, and it is up since then. And in after hours, it seems to be doing fairly well. So hopefully that will continue with this great option play. And by the way, if you're not in the action trade alerts, we do put these option trades out from time to time, and they're a lot of fun. And we do the one good thing about them is that they have a limited risk because they have a limited downside. So that is a good thing. This is a great way to play shorts without having as much risk as you would normally have if you just shorted the stock directly. If you want to get on the list, of course, to see these, just go to www.Dallas Trading Floor to see more of these spread trades. We have one last spread trade here that will kind of give you an update on, and this one is the bear call spread that we have on Tesla. Tesla has been in kind of this funk as of late, and unfortunately it has been going down, but just like we made money going up, we can make money going down on Tesla as well with this bear call spread. As you can see, the price of Tesla, it fell today down to 837. So with this particular trade here, as you can see, as it moves lower, we will move into the green zone on this one. There's a potential profit of this one. We could potentially make $860 on this one if it moves. If it stays essentially here and it moves, it continues to move down, which unfortunately I do believe that is going to be the case for Tesla. So it's just one of those things. But we can make money as the stock goes up or if it goes down. Just want to show you my portfolio. This is the small portfolio. Just kind of wanted to show you what I'm in currently. Again, I was in Google today. I did sell half of my position. It was down significantly today on lower volume, down almost 1.5%, which was quite a lot. So I did trim my position on Google. I'm up on Cheniere. That has been doing very, very well. Let's take a look at the live chart for Cheniere. These are the kind of stocks that are going to probably be doing better in this kind of market, just because it is, it's just one of those markets. I mean, oil and gas is doing well, natural gas is doing well, but not a whole lot else. I mean, this has sort of been the case. This is the chart for Cheniere. It was up and then it's up after hours once again to 140. So we entered this position at 114. So we've had a very nice run. We've been pushing our stop loss up. So when this pulls back, and I'm sure that it will, hopefully we will be sold out at a good level on that. So that kind of gives you an idea of Cheniere. We're also up on Matador, as well as Nutrien. Nutrien, of course, is this strange, and I call it strange, fertilizer stock. We've been doing very, very well with it. And it is up as well. Let me show you the chart on Nutrien. And as you can see from this little mark here, we have our stop loss right below 90 on this one. After hours, it's basically at 94.98. So this one is doing fairly well as well. We initially were in the position on the 8th of February at a 74.27. And then we added to the position on the 1st of March at 86.15, and currently it's at 94. So this is doing extremely well. Again, we're going to probably be pushing up the stop loss on this one a little bit so that when it pulls back, and eventually it will, because this is very, very steep, we will try to be, taking some of the profits there. Also up on Williams Company, this is a gas pipeline. WMB is the symbol for Williams. This one is also, we've been adjusting our stop loss up on this one. Show you the chart on this. We have moved up very nicely. You'll notice that, I'm kind of an old saw here, but the stocks that are working right now are in the oil sector and in the mining sector, and shipping. That tends to be where we're seeing the best, we're seeing the best action. Tech is unfortunately just weighing it down. We're going to be shorting a lot of those big issues in tech. We're probably going to be using bear spreads only because it limits our risk and it doesn't use as much capital. We'll probably be doing that. But other than that, we're probably going to have to move back to more of a cash position. Unfortunately, don't really like to do it. I like to be exposed to the market, but this is just getting difficult to expose to the market. Here's how I'm allocated in the small portfolio. You'll notice that the that the cash position has gone up, but essentially we're doing quite well. We did add positions. We did add positions in Raytheon and in Berkshire Hathaway. They're both flat, but everything else has done quite well. Of course, we've just added Raytheon and Berkshire, but everything else is looking fairly good. If you want to see this slide, of course, and you're on TikTok, just go to my profile, click on the link, and then you'll be able to get the feed directly from YouTube. You'll be able to see this slide. It shows the allocation of the small portfolio and the stocks that we're in currently. Basically, we did eliminate our position in Google here because it fell too low. And again, if you're down more than 8%, you want to cut your losses. That's what I did here. I'm waiting for Google to come back. I'm not bearish on Google, but I want to get my chips off the table right now because I do think that it may go a little bit lower before eventually it rallies. I believe it's going to rally into the July 1st time frame because that's when it's going to be splitting 20 for 1. So definitely took my position off of Google here, and that is that's the way it is. That's the way it is. If you would like to get access to a great list, this is our ready list. These are highly rated stocks with the pivots, and it is a live chart stock. You can get this by going to this address here. This is the March 2022 ready list. Super easy to get on this one. You need to go to this address, https://bit.ly, BITLY /DTF0094. And if you do that, then you will be able to get a hold of that list. Again, the address bit.ly /DTF0094 for the March 3rd, 2022 ready list with pivots. So that's a kind of a cool chart, and it is a live feed on that one. So you'll be able to sell if it's if it's in the buy range or not. So that's a good opportunity to get that. This is the same one that we use to buy here at Dallas Trading Floor. So basically, if you want to get on that action trade alert, remember the address here is www.dallastradingfloor.com or our YouTube feed, www.youtube.com/Dallas Trading Floor. So there you go. All right, let's get on with some of the questions. Thanks for waiting, everybody. And first question, Jim, I'm looking at the Google chart, and it's going to have the death cross. Should I come out of Google? I do believe you should. I did move out of Google. It was painful. I did sell my position in Google today, half of my position. I'm not totally out of it, but you're absolutely right. It's getting to the point where it is looking like we are going to have the death cross. And, I keep talking about that, but you're absolutely right. I think you've been watching the show. Thank you very much. I appreciate it. But if you'll notice, when that 50-day moves below that 200-day, that is a sign of weakness, and that means that it can't hold on to its gains, and it's probably going lower. That's one of the reasons I reduced my position today. You're absolutely right for thinking that way. So, it's just one of those things. We're going to have to wait through a little bit of weakness here, and then hopefully, when it comes back, we'll be able to, we'll be able to benefit. Now, remember, it is splitting 20 for 1. If you're of record on the 1st of July, but it doesn't look good, unfortunately, right now. It has been pulling back. I mean, even with all these great funds in it, it's just been tough. This is the market, not the stock. So even the very, very best stocks cannot hold up during a pullback like this. Excuse me, I had to get some water there. Thanks. But we definitely it's got a good rating. I think you're smart to come out of this stock right now just because it's the overall market. It's time probably to go once again back into cash, not something that I'm interested in doing, but it's just one of those things. Okay, let's take a question from TikTok. Thank you for waiting, everybody. I so appreciate it. Let's see. Okay. Follow those. Thank you very much. I appreciate that. Waiting for drip to do something to save the day. Okay, let's look at drip. This is from TikTok. DRIP is the symbol, and let's take a look. That is the oil and gas 2x. It's a bear 2x. I would be really careful about this one. I would not be in this. I would not be in this one. The reason is, and I just want to show it to you. This is a bear ETF, a 2x bear ETF. So we don't want to be in drip. We really don't want to be in this one, because as the market goes up, this one is not likely to do well, because it's not a bull it's not a bull ETF, it's a bear ETF. I just think I just don't think you want to be in this one. Maybe it will turn around, but right now I don't think so. So my recommendation on drip is, stay out of it, because I don't think it's going to be very, very good. So I would, stay out of drip. I would stay out of drip right now. It just doesn't. I don't think it's going to be good for you on this one. Just stay out of this one. It's not a good. It's not a good stock in this environment. Oil is going higher. The ETF that you want to concentrate on instead of drip is the energy spider. That's the XLE. That's the one you want it. That's the one you want to be in. So, this is the one you want to be in. So this is the one you want to be in. Is the XLE, not drip. Not drip. XLE is one you want. This one is starting to move very, very nicely. Let's look at the daily chart on the Energy Spider. Of course, this is the Energy Select Spider for the oil, for oil. And as you can see, it's just nicely moving up. We had record oil prices. So this is I think that even though this is extended, now remember, this is not a stock. This is a ETF, an exchange traded fund, which means that it has a basket of stocks in it. So this one is doing very well. XLE closed at 75, and of course it was up today very strongly, 2.87%. So this is the one. Instead of drip, take a look at the XLE. This is the one you want to be in. This is the one you want to be in. If you want exposure to the market, you want to be exposed where the market is going to be strong, and the strongest parts of the market right now still are in that oil and gas and mining areas. That's really where they've been. So, it's just one of those things. One of those things. Guess the investors ditched Micron. Yeah, again, tech has just been super hard to invest in. I was going to pull the trigger on MU. I was waiting. But you know what? Let's look at what happened. You're right. I mean, it just got hammered. MU just got hammered. It's almost all the way back down to the 200-day line. Very disappointing. Great company, but again, in a declining market, even the very best stocks can't hold on. And that's definitely been the case. We're below every major index except for the 200-day. It is still above the 200-day. Unfortunately, we can't do anything here. It's got a 78 checklist, and it's just a disappointment because it was making such good progress, and then wham, today, lots of selling going on. And basically, we're still, we're 15% below the pivot, the buy point. That's with a cup and handle. That's up here at 96.50. We're still 15% to there. So boy, it's kind of disappointing. I have to I have to say, tough market to trade. Just have to be, it's just it's just one of these things where we just can't really catch a break, and so we just have to be, we just have to be out of it. And that's just, so it's just a kind of a frowny face on the, it's just kind of a frowny face. on this stock. So terrible. Not what you want, not what you want to do. But right now, the place to be in the market again are the oils and some of the mining stocks. Everything else, probably not, unfortunately. Just the way it is right now. All right, let's look at UCO. UCO. See if I can give you something good there. And this is, of course, the ultra crude. Now, this one might work too. Again, this is, you're right. The oils are, the ultras have been very, very good. This is, this is a 2x. This is a leveraged ETF. So this is like 2x of like the XLE or something like that. So it's going to give a little bit better performance. This one was up just strongly today. Look at that, up $19 to basically 177.38. So very strong. Could you buy this one? Well, I don't think I'd buy it at this level. I think I would take a little bit more conservative approach. I do like this idea. I think the more conservative approach would be to buy the XLE. This is more liquid than the other. This is a little bit less aggressive. And this, of course, is not a 2x. This is not leveraged. The thing about the leveraged ETFs is that, especially when we're in a downward trend like this, they can be ugly if we get a movement against the trend. So I would on the ETFs for the oil sector, I would probably not recommend the 2x ones, just because the leverage it'll help you on the way up, but it can really hurt on the way down. So I think right now in this market, we've got to be more conservative. So I would go with the XLE over the UCO. So that's what I would do. But that's a very good question. Thank you very much for that. Let's look at ENPH. ENPH. Yeah. And that is in-phase energy, and of course it is solar. Now, here's the thing about the solar area. Solar is not going to do very well. Now, I know that with Russia attacking Ukraine's nuclear plants, and you think, well, wouldn't solar do well when wouldn't solar do well in a situation like that? I don't think so. And the reason I don't think so is solar is highly based on tax credits from the government. If the government does not have as much money because of higher oil prices to cover solar, you're going to see some weakness in this area. And I definitely think that's the case with this one. Another one I want to show you is called First Solar. This is the leading in the area. It's FSLR. And this one, I do believe, is a shortable stock. And I want to show it to you. It is below the 200-day line. This is one I think that we might want to consider doing either a short on or a bear spread on this one. But this is a very weak area. Energy Solar is rated 196 out of 167 out of 196. So it is in the bottom 20%. So solar right now, and this is what we've got to be careful is, solar is in the low, the lowest 20% of the stock market. Okay, so right now, solar is in the lowest 20%. So hopefully we can see that. Well, it didn't work, did it? So solar is in the lowest 20% of the stock market. That's one of the reasons why I think that if you're going to be in solar stocks, we got to be short them and not long them. So right now, with the situation with that, I wouldn't be looking. I wouldn't be looking at any of the solar stocks right now, unless it was to short them. So that's really the situation there. So wanted to put that out there. All right, Matt is asking, what about Southern Copper? That's SCCO. That's a symbol for Southern Copper. That's one of the largest copper miners in the world, and they are doing well. The miners are doing very well right now. So the question is, from Matt, I think is, what can we do with that? Where is there a buy point? Well, I do think that, we did have this reversal. I'm going to draw this reversal line here. And what am I doing? Well, what I'm doing here is I'm showing you when the stock went from a downward trend, which it was in, up to basically the beginning of March, and then it's broken that trend. So definitely we can possibly get into this one. This is looking strong. Now, this is below the pivot. The pivot here, the buy point, 89.23. So let's look at the statistics on this one. And this has got an improving. This is looking very, very good, by the way. It's above the 200-day, the 50-day, the 21-day, and the 10-day line. So it's looking very good. And it is looking like it has a 100% checklist. So I definitely think that, this one is actionable. I really do believe this, Matt. Thank you very much for this, putting this on my list, because I'm going to write this one down. This is an actionable stock. You definitely could buy this one. So SCCO, and I think that is actionable right now. So you can buy this one right now based on what I'm seeing. Based on what I'm seeing. So SCCO is a buy right now, and that is looking very strong. So thank you very much, Matt, for that. So you could definitely buy it at this level. At this level, it's below the 200-day line. This is where you like to buy them. It's above that reversal line. So this is a buy. You could buy SCCO. So I really appreciate that, Matt. That's a great suggestion. Thank you very, very, very much for that. Thank you very, very much like that. Okay, let's take a look from TikTok. I'm looking here. Energy. Okay. Well, that's definitely the place to be looking for stocks right now, is in the energy sector. Let's take a quick look at some actionable. I want to go through a bunch of stocks in the energy area to see if we can find stocks that are actionable, because again, we don't want to be completely negative here. We want to be in the very best areas that we can in the market, as the market opportunities are presented to us. So what I'm going to do here is I'm going to go to the industry group for energy, and that is I'm going to go for that. And currently, that area of the market is up here. It's right now. It is the number one group, the international E&Ps. And let's take a look at the international E&Ps, because this is the number one group right now. I want to look at the strongest stocks in this group to see if we have anything that's actionable. That's actionable in this group. So what I'm going to do here is I'm going to go through some of these. Let's look at Valero and take a look. This is the biggest one in the group. It's got a relative strength of 99. This is one, it's a little bit extended, so I don't think we could buy it. Unfortunately, really would like to be able to buy this one. Let's see if I can. Let's see if I can get something that is not so extended. Let's look at Oxy. Oxy is extended too. Would have been a nice buy there, but it is extended as well. Let's see if I can find something that has got a high relative strength, but is not so far off. Okay, let's look at Murphy Oil. This is one I've been watching very carefully. I do like this one a lot. It is extended, unfortunately. I did have a buy. I pulled the trigger on this one, but I sold it, and I'm still not back in it. So let's take a look at another area in the market. Let's look at my old favorite. That's the U.S.-based E&P companies. This is where I have a number of. I've been pretty successful in this area. This is where Matador is. This is where Callum Petroleum. There's a lot of companies here. So let's look at one. Let's look at Chesapeake. I want to see how that's doing. Boy, these are all extended. all extended today. Just a tough place to make a stand, but these are all looking good. So here's what I would recommend doing, at least for right now, is I would just recommend using the XLE, because XLE, this is probably the best place to be right now in the market, is that's the Energy Select Spider. If you're going to be in anything, it's going to be the XLE. So that's kind of my take on it, anyways. That's kind of my opinion. I put money in this one. Okay, so here we go. Thank you very much. Here's a comment from TikTok. Somebody put money in the XLE and they're doing well. So I like to hear that. I like to hear that very, very much. Did it go through the death cross recently? DXCM. Let's look at DXCM here. And this is also from TaxLock. DXCM. Let's look at that. And that is Dexcom. Boy, it did. You're right. Absolutely. Thanks for that comment. This stock just recently went through the death cross, meaning that we're going to see some weakness ahead for Dexcom. Basically, it develops a glucose monitoring system, so it's in a good space. But this death cross is something we just don't want to see. 50-day moving below the 200-day. That shows weakness, and even though it's rallied, this one might be a good short candidate. Believe it or not, this might be a good short candidate, because when it moves below that 200-day line like this, it will come down and then it will rally back up, and then it'll come down and then it'll rally back up, and it looks like it's just getting ready to make a move lower. So what I want to do is, in my short list, I'm going to put on this one, because this is looking DXCM. This is on the short list here. So I would shortlist this one. What do I mean by shortlisting? Well, when you see weakness like this in this kind of a market, that's where you want to be building your kind of your negative watch list. That's like kind of the only way I can really explain it. So I call it the short list. And this is one that possibly are going to be good for shorts. Short list the DXCM. So that's what I would do with the stock, because this one is showing weakness with the death cross. It was formerly up here, way up here at 690.95. It's currently at 400. So there's a fair amount of meat left on the bone. What do I mean by that? Well, the meat is it's only dropped about a third. It could drop another third very easily, and that makes sometimes for a very good profitability, because that's when you can make money in a stock as it's going down. Now, it does have a relative strength line of 55, which is, if this was 95, I wouldn't short it, but 55, I'm okay with doing that. This is falling faster than the NASDAQ. This line up here is the NASDAQ, and so it's falling faster than the NASDAQ. So we're seeing some weakness here. There's definite weakness. Now, let's look. When do they have their earnings? Their earnings are due on the 29th. And it does look like, it does look like that, going into earnings, this may be weak. So we might want to do a short bear trade until earnings, which is on the 29th, because another thing about this one, this has been, their sales have been going up, but their profits have not been going up. So this might be a very good, very, very good short. So I'm going to put that on the short list for right now. Thank you very much for bringing that to my attention, because that is always a good thing to do. All right, let's see, MU. Yeah, that's kind of a disappointment. I wish it were better. Let's look for location. We did use CO. Let's see. All right, let's take a look at ENPH. Let's look at ENPH and see how that one is doing. ENPH. And of course, that is interesting. Oh yeah, we talked about that one. Anything in the solar space, I think just got to be super careful right now. Again, another one on the short list is First Solar, FSLR. That is also on the short list. the solar energy is highly dependent on tax credits, and if we're in a period of it's highly dependent on tax credits, so I don't expect them to be as plentiful as they have been in the past. LABD, let's look at LABD. And it's Roman. Okay, yeah, this is the bio. Wow, this is like the anti-bib. Bib is the Biotech ETF. And gosh, I don't know about this one either. I would be really careful about this one. But again, I have to admit that I am not good in the biotech space. So I don't know about that one. I don't know about that one. Let's look for J at BHB. And see how we're doing there. Bar Harbor Bank shares. Interesting. Okay, so this is one of the banks, not my particularly favorite area, by the way, in the market. Sales have been going down as well as profits. Ooh, that's not looking good. Boy, 75 relative strength. That's not too bad. Let's look at the technicals on it. Well, it's below the 40-week line. I would avoid this one. I would avoid it. Just yeah, I would avoid. I would avoid this one. BHP. So I would definitely avoid this one. And I just think that that's what you got to do. You got to avoid it because I don't think this is not a good chart, and just not where you want to be. All right, let's take a look at the. Oh, what about the XRP? So this is the ETF as well. XRP, and oops, there you go. So let's see if it's going to give it to me. XRP. No, it's not going to want to be. Okay, well, heck. Equities will drop and crypto will explode. Actually, I don't know about. I don't think I. The problem with crypto right now is that you have so many of the banks, the central banks, that are moving against it. So I'm not so sure that's true. The GBTC, which is 4%, represents 4% of the world's Bitcoin, has been trending lower, and it does have the death cross. And why do I say that? Well, I'm not anti crypto, but I just think that right now in this weird environment where we have, basically we have a war going on, a lot of people are going to be cashing in their crypto to get dollars to buy food. And I know that sounds terrible, but it's true. And right now, Bitcoin, the Grayscale Bitcoin Trust is moving lower with the death cross. So I would not. I know that the place that's going to get love right now is gold, and there are some gold plays that I want to kind of point out here. One of them is called Franklin Nevada FNV. This is a company that owns rights to gold mines. It doesn't actually have gold mines, but it owns positions in producing gold mines, and this is right in the buy zone right now, coming out of a double bottom base. So this is one you might want to look at if you're interested in a hedge. If you're interested in a hedge. So if you are interested in gold, consider FNV, Franklin, Nevada, because FNV does have these gold mines. That it does have these interesting gold mines, and I think that it's coming out of a double base, which is a very good pattern. It's above all the major indices. It Sorry, I had lost connection with that mic, so I appreciate. Sorry about that. I was just talking about FNV, Franklin Nevada Gold. This one is if you're interested in a hedge, this one's good. It's only 5% above the pivot, and it's on a double bottom. So this one should do well if we have fears of war and inflation. That's really when gold works. It's just about the only time it works. But I would recommend looking at that possibly instead of crypto, at least for right now. So, that's kind of the deal. Hey, thank you so much. Hey Jim, seeing death cross in the QQQ generally sometimes it is a analog indicator, which means we have to have we already bottomed? Yes, absolutely. That is a very, very good point that you're bringing up, and that is true. When you see the death cross in indexes, it's a little bit different than when you see it in individual stocks. That's a very good call there, because when you see the death cross, and we do have a death cross on the QQQ, the QQQ, of course, is the ETF that covers the NASDAQ 100. When you see it on there, this could be a bottom. I agree with you, but I want to see it reverse above this line, and I'm drawing the line now. Why am I drawing this? Well, the reason I'm drawing this is because we're still in a downward trend on the Qs, but you're right. This could indicate potentially a bottom, but I don't know about this time. There's a lot of factors. I wonder how much longer the pumping can happen. So there you go. But boy, that's a very good call. That's definitely definitely the way it works. Is on indexes, the death cross is not nearly so potent an indicator as it is on individual stocks. So that's very, very true. Thank you, Ella. Hi, Jim. My shares of INDO have been great today, but are they worth holding on to? Well, let's look. I mean, here's what I recommend. If you've had a really nice run on stocks, Indonesia Energy, okay, well that makes sense. An Indonesia based in oil and gas, okay, well you know what, I could see it. Here's what I would do, and I don't know if you can do this on this particular stock, because because it is trading on a foreign exchange. But here's what I would do. I would set a stop loss of right about 35 right here. I don't know if you can do that or not, but I would set a stop loss on this. I'd hold on to this, but I would set a stop loss on it, because you might have you might get some more action out of this. It probably will settle down, but I would consider setting a stop loss at 35. Yeah, 35. I think that might make sense. I think that really might make sense on this. This is just, look at how this has taken off. Just since February, it was just doing nothing, and then boom, all the way up. I'm not surprised. There's a ton of oil in Indonesia. As a matter of fact, that's where Shell was started. It was called Royal Dutch Shell back then, and Indonesia got a lot of oil. So that is that's very interesting. Very, very interesting. All right, we have another one. Now, this is not Google. This is a shipping company. And let's take a look at GOOL. I always get this one wrong. This is Golden Ocean. GOOGL. GOGL. This is why I get it wrong. GOGL. This is Golden Ocean Shipping. Did I get it? Yeah, Golden Ocean Shipping. And this one is interesting because it's a shipping stock. It's in an area that is doing well, and of course that is the bulk shippers. It's pulled back a little bit today. It's below the 10-day line. I still really like this one. It is extended, but look, it's right back up after hours, 6 cents. Now, this is a very cheap stock. It's only $11. Right now, what I've been hearing kind of through the grapevine is that with the shipping stocks, especially the bulk carriers like Star Bulk and this one, we're going to see high shipping costs through about 2004. That's what it's looking like. Normally, this is not a great area to buy stock in. I mean, bulk shippers bulk shipping is not a great area, but this is not a regular time. Right now, some of these stocks are doing good. This ship transportation area is 14 out of 197. Let's take a look and see in this area if we can find some other ones that might be better set up. Right now, this is a little bit extended Golden Ocean. Let's see if we can find one that is in the shipping area. Let's take a look. It's number 7. So let me see if I can put the rank up here. Okay, almost. Let's see if, yeah, number 7. If you'll notice, I'm looking at only the areas that are in the top 20% of the market. And there's a reason for this. In a downward trending market, we have to be just super careful. Now, even though, okay, now this is the right one either. Let's see if I get it right. I'm showing computer database, which is one of the worst areas, by the way. And this one, this is not chemicals, agricultural. Let's see if I can. It's shipping. Shipping. I guess I'm a little bit further down here. I think I'm number 14. Yeah, transportation shipping. Sorry about that. I was showing you another area that's terrifically good. That's the agricultural chemicals, but transportation shipping is very good. As you can see, it has a nice, it's trending well. This area is trending well, and it's a top area. It's 17 out of 197, so it's definitely in the top 20% of the market. What I'm looking for, of course, are top stocks in here. Of course, the crowd favorite is Zim, and that one is pulled back to the 10-day line. It's extended, but I still think you could probably buy this one. It's a little bit expensive at $71.89. Let's see if there's a better bet there that we can find in this area. This has got Zim has a 100% checklist. That's the reason I like it so much. But let's look at Kirby. This is one that I'm not that familiar with, but it's in the buy zone. This is basically it's a marine transport and repair of diesel engines. So definitely a kind of an industrial stock here. Let's look at the technicals. It's above all the technicals. It's looking good. It's got a strong checklist. Yes. So if you're interested in a stock that has some potential in a good area, you might want to write down this particular ticker, KEX, or Kirby Corporation. It's a very small stock, but it is right in the buy zone right now, and I do think that that right now this is a strong area of the market. So, as strange as that would sound, this is an area that you might want to take a look at. Take a look at on the pattern recognition. It's basically 4% above the pivot, so it's right in the buy zone with a cup with handle formation. And let's look at some of the technicals. Let's look at some of the fundamentals on this stock. And of course, fundamentals are the earnings. That's the kind of thing, not the charts, but the earnings. Let's take a look. And boy, we're looking good on that. We've definitely been losing money though, so I'm not sure what's going to happen. But our sales have been going up. The question is, when do we report? It reports on the 29th. So here's what I would do. Probably would not buy Kirby, but I would definitely watch list this one. So what I would do on this one, possibly, I wouldn't buy this one right now, but I would consider watch listing this. So watch list KEX and wait for earnings on 4/29. So that's when it's going to have its earnings are on 4/29. I wouldn't buy it before earnings, but this is the kind of stock you might want to look at. KEX is the symbol. It's in the transportation area, so kind of a strange area, but it is an area that is doing well, and it is in a buy zone right now. So very good. All right. Hopefully we see better days. I hope so too, but don't hold your breath. Don't hold your breath. I wish I could be more positive on that, but I think it's going to be a hard slog. But I agree with you totally. We've seen a total turnaround in 1 year, and it looks like it's going to get a little bit worse before it gets better. But as they say, it's always darkest before the dawn. So we've got to be we've got to be very, we've just got to be positive. That's all we can do. We can make money even in a declining market with shorts. And I'm going to trying to help as many people show the way that I'm trading, and maybe we can all make money together, because I'm not totally pessimistic, but this is a harder market to trade than it was last year. No question about it. Well, thank you, everybody. It looks as if gas is going up. Absolutely, unfortunately. Exxon Mobil, let's take it. That's the last ticker for the day. Thank you so much. This is coming from TikTok, of course. And by the way, if you're on TikTok and you want to get on the Axe Trailer, it's super easy. Just go to my profile and first and last name and email address, and you'll be on that list. All right, Exxon Mobil, of course, this once was the biggest oil company in the world. I don't think it is anymore. I think that Saudi Aramco is the biggest oil company in the world currently. But let's see if we can kind of analyze this one. Let's go over here to the daily chart first and look. It's showing some very nice progress. It is a little bit extended, but here's one thing. Just looking at this chart, the correct buy point of this would be of 66.38. But I have to say, it looks like it's moving above this resistance. So I don't, you could probably start putting a little bit on here. Currently, the after hours, it pulled back a little bit at 83.88. This stock, this is the old Standard Oil Company. This is what made many a millionaire in its day. And it's funny because it's now based in a place called it's now they moved their headquarters to a place called Spring, Texas. And my brother and I, we just bought several houses down there in anticipation of this in the Houston suburbs. This, of course, used to be Standard Oil. And look at their sales. It's up very nicely, 83%. And look at that. Wow. All-time record profits. So, boy, I tell you, when you could buy this kind of quality, it's got a PE ratio of 15. In this kind of market, I'm not a value investor normally, but I have to say this, if you're looking for value, this is right now in this market, this is value. I'm going all the way back to basically the beginning of time, at least on my map. It's 1987. You'll notice, and this is interesting about Exxon Mobil, we're almost getting to its all-time high, and this is a very interesting. This is a very interesting thing. So it definitely is looking very good if you want a long-term investment. Oops, that's building products. We want Exxon Mobil. That's XOM. I messed up on my charts here. There you go. Okay, Exxon Mobil, and I'm going to go to the monthly chart to show you kind of from the beginning of time. If you'll notice, at its high point was in 2008. Interestingly enough, that was right before the big crash. But if we draw a line, and that's the thing to do, it looks as if we are starting to get to where it's getting to its all-time high. Back in 2013, it was a little bit higher than where it is now, but it is nearing its all-time high. All-time high is about 95 on a split adjusted basis. So this is one that probably could go a lot higher. So I definitely like Exxon Mobil, believe it or not. I normally don't recommend stocks like this, but we're in a different market, so you just got to go with the flow. Well, thank you everybody for looking at my show. I'll be back on Monday at 5 o'clock, trying to give you the best update that I possibly can. Keep safe, and if you're not on the Action Trailer, it's super easy to do. Just go to www.DallasTradingFloor. And by the way, we do have a Discord room, and that is available as well. We start the trading day at the bell at 8:30 here in Dallas. We go about 2 hours, but I always check it in all the time, and that is available also by going to www.DallasTradingFloor. Now, this is a paid service, so just want to be upfront about that. The other ones that we have currently are free, so just go to www.DallasTradingFloor. And I will be back again, as I said, on Monday I'll be back on Monday at 5. Another thing, please like this. It helps us a lot when you like it, gets it out to a lot of people. Definitely, especially if you're watching it on TikTok or on YouTube, please like it. So without further ado, everybody stay safe. Be very careful with position. If you're down more than 7% or any position, consider selling and waiting for a better period of time. Not the greatest market right now, but we're going to start to get our short list worked on, and should have some good shorts that we can work with. Happy trading, everyone. I will see you back here on Monday.